This is Commodity Wrap. I'm Tony St. James. Brian Hoops is with Midwest Market Solutions. Joins us here today on Commodity Wrap. And Brian, as we ended this session on Wednesday, it almost feels like a cattle on feed report day, because it's almost as if we had to close the markets and then wait for the announcement from the Rose Garden. As far as tariffs, it seemed like everything was just kind of playing into how do we position ahead of this news. Is it just me, or would you agree?
You know, I don't think you're wrong at all, Tony. It just felt like a day, yes, we're just treading water. We did that ahead of the stocks and plannings report on Monday, kind of just treaded water, waiting for it to be released. And after it was released, there just wasn't much reaction to it. And yesterday we had a very strong rally on corn, soybeans, and bean oil off of some EPA news. And then today it's just more quiet trade, waiting to see what actually happens with the tariffs this afternoon. There's always that hope for a Hail Mary that somebody will start to get the ball rolling as far as making an agreement. And it looks like Mexico may be that first domino to fall. They announced that they would not be making reciprocal tariffs against the United States. So maybe that's a slow concession coming towards the United States here. And I think if there is going to be a country that makes an agreement first, it probably would be Mexico, actually. They are so dependent upon U.S. corn being shipped by rail into their country. They don't really have any other options. So I think they want to make an agreement with the U.S., and if Mexico makes an agreement, maybe there's some other countries that'll start to follow suit, and Canada with China probably being the last ones to make any type of agreement.
All right. We did see, I guess, some flashes, if you will, of positivity in the market. We did see a rally continuing in soy oil, a market that's gained well over 11% over the past 5 trading sessions. And we also have to work in the flash sale that you and I talked about early in the morning on Wednesday. So there's a bright spot, and maybe a weather-related trade for hard red winter wheat. I guess it was the winter in the wheat complex on Wednesday. What thoughts do you have?
Yeah, so let's kind of take them one piece at a time. This private sale of meal this morning to the Philippines, $135,000, really didn't do much to help soybean meal out today, closing over $5 lower. I was a little surprised to see that we would make a sale to the Philippines, but Argentina's harvesting their beans at this time, and usually they dominate the export business as far as soybean meal goes. So that was a little bit of a surprise. Trade didn't really think much of it. The bean oil had another stellar day, up over 2%, 2.2% gains today, and they've had a really strong week. A lot of this news is coming from the EPA. They are considering a significant increase in the blending mandates. Those groups are pushing for 5.5 to 5.75 billion gallons being blended, and the current mandate is only 3.35 billion. So that's a significant increase and would propel demand for oil seeds and byproducts considerably. And that's why we saw the futures market react so sharply this week, and including today. Now, it had a real supportive feature yesterday to soybeans, not so much today, as I think we were more focused on the tariffs. We've had rumors in the last 12 months where we've seen we're going to use more biofuels, we're going to use more soybean oil, and bean oil has rallied only for those rallies to fail. So this rally could end up being the same thing. Hopefully it's not. Hopefully we do use more of these biofuels. There's certainly a push to do that, but it's not really coming from the White House. They're more neutral, wanting the groups to work it out amongst themselves. The wheat markets that you were talking about, there is significant rain forecast for a lot of the southern Midwest and the Delta regions, but you're talking southern Illinois, Indiana, Ohio, parts of Missouri, parts of Arkansas where soft red wheat is grown. They're going to have significant rains. That's really, the crop would really love to see that at this time, as long as it's not flooding. And so we've seen some pressure against Chicago wheat spread against Kansas City, where there's only going to be light rains in southern Kansas and in Oklahoma. Northern Kansas and Nebraska remain very dry, and they certainly could use some rain. So traders are buying Kansas City, selling Chicago off of these weather forecasts.
All right. One more before we go to break here, and really the rally we've been seeing in the precious metals, pretty amazing. All-time highs. That sounds like a broken record. We've done it so many times here in 2025 for gold, up now 20% on the year. Silver up over 18% this year. Precious metals, is this kind of a safe haven trade?
I think it has been and probably will continue to be. We're hitting new all-time highs in gold, and silver has been strong, but it's kind of been a laggard compared to the gold market. I think we can probably continue to push the gold market to the upside here, just until there's more relief, I guess, or understanding of how the tariffs are going to affect inflation, because that is still a major concern for a lot of the economists, a lot of the world industry. Is will these tariffs spike inflation, cause prices to be more expensive? They didn't during President Trump's first administration. It remains to be seen if they will or will not be. But right now, traders are buying gold in case that is, in fact, what happens.
All right, Brian, hang on. We'll be back in a moment with more Commodity Wrap. This is Commodity Wrap. I'm Tony St. James, halfway through the trade week, and looking at livestock markets. Live cattle higher again, and one thing that really jumps out to me on the live cattle is the fact that we broke that 210 range on the April contract, hit 210.90, settled off of that high. Even though it's not the most active trading contract, kind of breaking through some new territory. We'll talk more about feeders in just a moment, but let's welcome back in Brian Hoops, Midwest Market Solutions. Brian, is that a key point to push through that 210 level?
I certainly think it was. You asked me this morning on TV if that was going to be a key, if we could get there, and I thought we certainly could, but yet similar to yesterday, there is bear spreading taking place. We're led by the June contract, and in fact, August outgained April today. That 190 or that 210, 210.12 area was a high from last Friday, and we pushed above that today and closed above it. Now the next resistance is about 211.10 from the March 21st highs on the charts for April. This is the best close we've ever seen for this April contract, whether it's in bear spreading, bull spreading, or whatever. This is the best close we've ever seen for this futures contract. So we're continuing to push higher. Midday boxes were lower. We'll keep an eye on that, but they've had such a strong week and a half to 2 weeks of gains that they are probably going to have some down days every once in a while. But I certainly think the cattle market, the cattle industry shows a lot of strength. Our export business might be slowing down just a little bit, but it sure appears our consumer demand is remaining very strong. All right.
Feeders as well, and just wonder if 300's in the cards. Is 300 one of those where it's like bowling the perfect game? All it takes is one miss, and you miss that perfect game. Can we get a perfect game out of feeders?
We can. I think we certainly can. It may take us a little bit of time. We're going to have pullbacks in the market certainly, but I think the market wants to try and continue to move higher and push higher in both the live and the feeders. We probably have not seen the tightest numbers of cattle yet. That's going to come probably late April or May, and that should give us a little bit more strength in both the live and the feeder cattle contracts. Right now, it's hard to make a profit on feeders that you're buying. It's a lot of risk, a lot of expense to put that type of money out there for an animal, but I think as long as there's that demand for it out there, I think it will continue. to support the buying interest from the consumers as well as from the feedlots wanting to put them on their in their pens.
Yeah, I'm glad you brought the feedlots into it. Current break-evens coming into the day about $90.54 a head. In other words, a loss of $90.54 a head if you put one on feed for the next 180 days. And the average for the closeout, one that's been on feed for 180 days, again coming into the session on Wednesday, was right around $365 to $370 profit per head. Yep, $365 to $370 per head profit for one that's been on feed for about 180 days. So we close out, and you look across all of your screens. Anything else pop out at you?
The stock market is one thing I think that really stands out to me. We had earlier this week a pullback. On Friday, we had a pullback. The old rule is if you make new lows on Friday, you're going to make new lows on Monday, and we did that. We went and made new lows. In fact, we took out the March 13th lows, only to come roaring back and close higher. And the last 3 days, Monday, Tuesday, Wednesday of this week, we've traded lower and ended up closing higher, assuming we do hold on to these gains that we have going right now. And that's a sign that this market, I think, has tried to put in a bottom and wants to move higher despite the concerns about the tariffs and whatever happens this afternoon.
All right. If we want to get in touch with you, where do we find you?
You can reach me directly at 417-501-5132, or you can go online. MidwestMarketSolutions.com has a list of all of our offices around the Midwest and list of our brokers there with phone numbers and email addresses and Twitter feeds as well.
Yeah, it's Brian Hoops with Midwest Market Solutions, and this